Hey, what's going on, you guys? Josh back with another video for the Tech Budget Group. Hope you guys are having a great day so far. And today I want to show you a risk management tactic that a lot of experienced traders use in order to give themselves some flexibility in the market without having to compromise on their risk management. And it allows them to let the chart play out in their favor, right? So, a lot of times we'll jump in the stock market and we'll get stopped out of our position by 2 or 3 cents. And all of a sudden, it'll reclaim and the stock will start to spike again without us. So what I want to do is I want to show you an example of you getting stopped out because it broke your resistance area, and then an example of you not getting stopped out because you were able to use that over and under risk management tactic that I'm going to teach you to avoid getting shaken out of position. So right now we're looking at IZEA. The stock opened up at 630. We had this nice big spike up to 680, came back down, created a higher low right here at 640, bounced off 640 twice. We had another spike up to $7, and then it came down and created a higher low at 650, right? So for a lot of traders, this next higher low at 650, that's where a lot of us would buy in if we were long biased, right? Because 650 is a $0.5 mark. The 200 moving average is running through it. And then also it's a higher low, which shows upward momentum. So let's say, for example's sake, we jump in at 650. Our risk is down to 640, and we're looking to make 20, 30, 40 cents a share profit, right? So stock starts to spike, bounce, bounce, bounce at 666. Then we get this huge washout down to 640, and it actually breaks 640, right? So if you were in this trade and you were risking down to 640, you would have gotten stopped out right here, right? But what happens, right? What actually happens is it washes out, it reclaims, and then we get this nice uptrend, right? And if you watch, 2 hours after you got stopped out, the stock spikes up to 763, right? So that's a $1 move from where you got in at. You got in at 650. The stock went up to 763. So you missed out on a $1 move of price action because you got shaken out on this washout, 20 minutes after you got in. Now you might be saying, well, Josh, man, that's the backside of the move. There's no way to know if, the stock was going to go that high. So, this is just speculation. Well, let me break it down for you, right? Let me give you a different example. So let's say that we got in at 650 also. Our risk was 630 and our guide was 640, right? So the stock starts to uptrend, 666. We get a huge washout, right, down to 640. We crack 640. We get a huge washout, but it reclaims, right? So what am I looking for, right? What am I looking for to determine if I'm getting out or not, right? So what I'm looking for is this. When this stock comes down here and it cracks 640, first I look at the volume. Now you see here, we get this huge little, not this huge, but we get this little bounce and increase in volume right here at the crack of 640, right? So it cracks 640, then it reclaims. Now, if this had cracked 640, came back up to 640 and created resistance, and it couldn't break past the support level at 640, that's when I would have decided, all right, well, obviously 640 is acting as resistance now, so I'm going to be looking to take my position out anywhere between 640 and my risk level down to 630. But I'm using 640 as a guide to let me know whether or not this is just a washout, which is what market makers like to do. Because a lot of times, just so you guys know, market makers can see your stop losses, right? If you have an automatic stop loss down to 640 and the market makers see that, hundreds or thousands of people have a stop loss at 640, what they're going to do is they're going to crack 640, right? All those stop losses are going to get hit, and you're going to get this huge washout, increase in volume, huge washout, and then it's going to reclaim, and you're going to uptrend again, and you're going to see, like we did here, we ended up going up a whole nother point. But what they did was they washed out all those people who had their stop losses at 640. So now those same people who got shaken out, they're going to have to chase the stock now. They're going to have to buy on this uptrend and push the stock price even higher because they got shaken out earlier when the stock broke past 640. But if you had that risk tactic, that risk management tactic that we're talking about, and you were able to say, all right, well, I'm getting in at 650. My guide is 640, which can still be your risk. It just depends on whether or not it holds as support or resistance, right? If it holds as support, it's still your guide. If it holds as resistance, that's your risk level, and you take your position off, right? So getting at 650, 640 is your guide, 630 is your risk. Now, if this thing were to break past 630, that's when you cut your loss, right? If this thing breaks past two key support levels in one fell swoop, yeah, take your position off for a loss, right? Because a lot of times it'll break past one support level and then it'll hold the second, right? Very, very rarely do you see a stock break past two support levels in one go, right? It's very rare. Because if you see here, I mean, look what we're talking about. 640 cracks. 630 is a support level because that was the red to green move. So it breaks 640, you get this washout, but it reclaims 630. I mean, it holds 630. So like I said, it doesn't usually crack two support levels. So 640 is your guide, 630 is your risk level. And if 640 reclaims, you know that the stock is still using 640 as a key support. So hope this helped you guys out. Hope this gave you some ideas. If you have any other questions, go ahead and leave some comments, and I'd love to talk to you more about it. But hope this gave y'all some ideas, and I hope this gave you some inspiration to adjust your risk in order to avoid getting stopped out, especially if you're experiencing a lot of problems where you end up getting stopped out by a couple cents every single time. This will help you kind of solve that dilemma. So thanks for watching, guys.